The Federal Reserve increased interest rates. Can you believe it? They did it again. I am going to show you what's happening today as a result of all of their actions so far. It's important that we follow along with their details so that we know what's going to happen to our retirement account, so that we can figure out what's going on with the housing prices and get a handle on inflation. You came here for the truth, so let me unveil that for you. First things first, you can see yet another bank encountering troubles. PacWest falls more than 20% as regional bank stocks slide to new lows. Of course they are concerned because you can see the tightening that's been taking place with the Federal Reserve and other central banks around the world and what they've been encountering. But I think it's pretty clear that overall there's big concern with the regional banks, even though we know they're not going to lose their money in terms of deposits. But clearly, who's winning here? JP Morgan is one example. And in other news, Apple, if you hadn't seen the previous video to this one, Apple, they introduced, along with Goldman Sachs, by the way, a 4.15% high interest savings account. In 4 days, they attracted $1 billion. This is unbelievable. People trust Apple and Goldman Sachs more than they trust the regional banks. Clearly, they're getting a lot of flows in. JP Morgan getting a lot of flows in. Regional banks, they're losing out. So what we can experience here is more of the same. Inflation picks up, consolidation during crises, and time again, we see these patterns. It should not be a surprise to anybody. Look, you could see it for yourself. First Republic, the third failure of a large regional bank this year. You had SVB, you had Signature Bank. All of these companies are basically saying, okay, well, we need to fix our structural issues, but as long as the interest rates remain reasonably high, well, then they can't. We believe that banks with assets of greater than 500 billion and less than 60 billion are the clearest winners in the new world order, while there is likely to be a no man's land between 80 and 120 billion, as banks in this range may need to shrink to avoid new regulations or more actively engage in M&A to increase scale and absorb regulatory costs. Do you see what's going on here? I think there's going to be a lot of the mergers and acquisitions. That's what I believe. And we've already seen that to some degree here with JP Morgan. Michael Milken says recent crisis is the same mistake banks have been making for decades. This is part of the conference that was going on. You had a lot of the people through there, the Milken Institute global conference that took place. In part, you had the governor of California was there, the mayor of Miami was there, Grant Cardone, Dawson was there, Brandon Dawson, a couple, important people. And they were there, essentially, it's kind of like a mini Davos, okay? So these guys, they sit around and they listen to all these people talking about what they think is going on, just like a Davos would. It's not exactly the same, but anyway, they have basically said, what's going on? Well, you shouldn't have borrowed short and lent long. Finance 101. That's what SVB did. How many times, how many decades are we going to go and learn this lesson of borrowing overnight and lending long? Whether it was in the 1970s, 1980s, and 1990s. He makes a very good point. Again here, the banks have enough credit, they had enough equity, and they had enough to absorb the credit losses that are coming. However, what they did is doubled, tripled, and quadrupled their size by borrowing overnight at the artificially low rates and buying intermediate securities. So you got to realize this. They did that. These companies you've seen, SVB and others. But all of the companies did this. They all did it. They couldn't borrow at higher rates, or they could have taken much higher risk. What did SVB buy? Mortgage-backed securities. Do you realize that the 2008 toxic assets are now just mortgage-backed securities? That's the stuff they were buying. How many other companies did that? We're going to be finding out all about that. At some point, the Federal Reserve is going to have to cut rates because they see that inflation is so fantastic for the people, and it makes sure that they're let's just say, taken care of, they're subdued. And so during that process, during that time frame, they're going to be pushed down, and they are going to be, beholden to whatever it is that comes onto their plate. Higher inflation levels are the way to keep control over the masses. This is what's going on. You have to realize this. We've got information from Stanley Druckenmiller. Check this out, okay? Look at what he had to say. Druckenmiller warns that the US debt crisis are worse than he imagined. Billionaire investor says the Fed is fueling reckless behaviors. US fiscal problems go far beyond debt ceiling battles. Completely agree with this, of course. The fiscal recklessness of the last decade has been like watching a horror movie unfold. In a follow-up email, he said that he hopes the US government doesn't go into default, but honestly, all this focus on the debt ceiling, instead of on the future fiscal issues, like sitting on a beach at Santa Monica worrying about whether a 30-foot wave will damage your pier, when you know there's a 200-foot tsunami just 10 miles up. Isn't that the case, really? Doesn't that make a lot of sense? That there's so many big issues that they're always worried about this small nonsense. But I've told you 100 times before, they do this to distract the public. At the very last second, they slip in a bill that's 4,000 pages and is filled with what they call pork. The situation today looks much worse than I had imagined 10 years ago. He's talking about entitlements, Social Security, Medicare, Medicaid, without cuts today, would have to be slashed in the future. And that's scary because a lot of people are relying on this. A lot of people. And of course, I don't think they're going to cut. I really don't. And what they'll do instead is they'll increase taxes on the middle class and effectively make people poorer in general. And that's the way that you do it politically. That's just the way it goes, right? And they don't tax you, they don't increase your income taxes. They put taxes on everything else. Okay, you want to drive, they're going to put a tax on that. You want to eat certain types of food, they're going to tax that. And they don't do it like it's not a tax that you see on your receipt. It's on the manufacturer, it's on the developer, it's on that end. And then they slip that into the price. And you say, wait a minute, I thought, let's just say chicken was, $5. Oh, and now it's $6. What happened? Oh, those greedy corporations. Well, we don't realize is that, that now there's a carbon tax put on them and that increased the price by $1. That's what goes on. That's really the case today. That's inflation. Inflation in services, inflation in products. You experience that inflation directly. And of course, that has an impact on everything that you do. Okay? Is the debt limit constitutional? Why? This is a joke. I mean, it's really a joke. The debt limit is going to be abolished. I mean, does it even exist today? It's just a figment of our imagination, isn't it? What do you think? Put it in the comments. Do you think that this debt limit, besides all the arguments over it, really exists? Because I kind of, maybe my memory is a little bit, I may be forgetting a few things. Do you think that there's been a few cases where they've increased the debt limit? Oh yes, that's right. Every single time. I mean, why do we even have this argument? It's silly. Now, moving over to Canada, you can see, as you can see what they've written here, Canada has not seen a bank run in 38 years. The purpose of that is to really allow the minister and the government to bring forward a temporary measure under extreme circumstances, just to help promote the financial stability and safeguard the public confidence in the system. Basically, and what they were talking about here is introducing something to, so in the United States, it's a $250,000 FDIC insurance. In Canada, it's $100,000. And what they say is, let's just move to, in the cases of crisis, we will increase that or just eliminate it altogether. And they're going to do the same thing probably in the United States, in Canada, all these different countries. That's likely to happen. And what's the difference, really? They're just going to print trillions of dollars and devalue your currency anyway. Crisis hits Canadian banks' deposits in the US, with TD faring the worst. Deposits at 4 Canadian banks with significant US divisions slipped by 3% quarter over quarter. So they're not immune to all this. That's the point I'm trying to make, whether it's Canada or the US or wherever. Bad news if you want to live in Toronto. They did a study on how much it costs to live in Canada's biggest city, and based on their calculations, costs for homeowners have skyrocketed 58% since last year. Do you understand what I just said? Since last year, cost of homeownership has increased by 58%. If you thought that you could get a home and the price basically just elevated by 58% because of all the other costs associated with that, you just got punched right in the jaw. I just knocked you out. 58%. That's crazy. As they say, Mike Tyson, everybody has a plan until somebody gets punched in the mouth. That's kind of what this is. Good luck. see it here. Average price for Toronto home, $1 million. Home buyers looking at an average, 20% down payment if they can afford that. That's $843,000 mortgage. You're talking about 4.24% interest rates. With you attach on the home insurance and property taxes, $5,200. How many people are really in that zone? Of course, cars, you add hundreds of dollars there. People don't have $7,000 a month for basic expenses, cars, insurance, house, all of that. And yet that's what's going on here. So it's just really unbelievable no matter where you look. And the expectation, as I've mentioned 1,000 times, in this case Canada, but I'm showing you US as well, is that interest rates are going to come down, so don't worry. Well, let me tell you something. What the bankers are doing right now, what the tech companies are doing right now, is that they are laying off thousands and thousands and thousands of people. Clearly, they see something's wrong. If they were the ones who had the all-seeing eye, and they would perhaps consider, it's just going to be a little bump in the road, would they really be firing a lot of people, thousands of people? Probably not. They know something. I don't know what it is, but they know something. Okay? And then I'm going to end it there. What I found interesting here today was simply to discover all of the banking crisis that we've had in the past. We're just repeating the same problems. And that means, they can kick the can down the road by printing trillions of dollars, but your currency devalues each and every time. So pay attention to that. Hold on to what you have in real assets. Do not hold cash for long periods of time. You know that the value is eroding, and invest in yourself. Invest in yourself. Pour thousands of dollars if you can into yourself. You take books, courses, audiobooks, mentors, whatever you can do, invest in yourself, because it's going to pay dividends down the road. That's what I'm talking about. If you want to contact me, you can always do that. David@themoneygps.com. I'll see you tomorrow. Take care.